Welcome to Theo Trade. This is Don Kaufman. Here we are. It's Monday, December 19th, 2016. First and foremost, we still have about 40 minutes left in the trading session with the S&P futures right now massively unchanged on what is amounted to, again, a very, very light trading session. I want to highlight this. We're only doing about 761,000 S&P contracts. Now, yeah, the day isn't over, but just to measure this, and again, you're looking at intraday trade, but to measure this against many recent trading sessions, again, in terms of volume, it's light out there, folks. So I wanted to take the time to look at a handful of ideas, but then get into a little bit more strategy-oriented discussion. So first of all, the remainder of this week, one of the things to keep your eyes on, of course, is going to be the bond product. And I continually mention the bond product. That too has seen some lighter trade today, but the bonds are bid up by 1.5. Now, if you don't follow bonds, okay, they move in ticks. 1 tick, okay, 2 ticks. You're like, whoa, I don't even know what a tick is. Well, 32 ticks is a 1-point move. So when I say they moved 1.5, you know, that's a point in basically 16 ticks. Now they're a point in 15 ticks. The ZN over here today, moving up 17 ticks. Again, the bonds, okay, the notes, they're getting bid up a little bit. As they get bid up, it cools off some of the interest rate associated with them and can influence the financials. The financials obviously coming off just a bit. More importantly, and one of the most important stocks in the marketplace, Bank of America, having last Friday a 50-cent down day, a little bit of follow through. Again, the day is not over here. All right, so still about, again, 40 minutes to trade in the day. Now, with the time, again, when you're in a light liquidity, lighter volume, trade like this, I like to strategize a little bit and sometimes use the time to, go over that. So the rest of this week, you got to watch the bonds. If the bonds get bid up the rest of this week, it's going to hurt the S&Ps. It's going to hurt the broader market. It's going to kill a little bit of the, the Trump rally, if you will. IWM. Why am I going into IWM? I placed a trade here in IWM earlier in today's session, and it's neither here nor there whether the trade is up money or not. I'll come to that momentarily, but smart trades with good risk reward is critical. Now, I mentioned a trade this past weekend that was in Bank of America, and the Bank of America had a wonderful risk reward. We were going out in Bank of America risking $2.50 to make drastically more than that. But one of the things, again, I want to resonate on all time frames is, if you're listening to this, you may not trade intraday. And I'm going to show you a setup that is intraday, but this can reverberate through really everything that you do inside of your trading. And I'll give you a quick idea over here. What you're looking at right here, right now on your screen happens to be the 136.5 puts inside of the IWM. Okay, so the IWM is trading at 136.38. And I've gone out, and I did this earlier today, I purchased the 136.50 puts. Now, the only time I just outright buy an option, okay, is ultimately for an intraday trade. But again, I want the idea, the logic to kind of resonate with you. And I started this conversation a bit yesterday, but if you think of the marketplace, here's the marketplace right there. Yes, it's a flat line, right? Think of the marketplace, okay, as a 50-50 opportunity. 50% chance going up, 50% chance going down. All right. So at the course of the trading day, we trade up a little higher, we sell off, we trade up a little higher, we sell off. But for the most part, you're putting on a position, okay, that even if you're the best market technician out there, it still may only have a 50-50 opportunity. Now, can that be viable? And the answer is, well, sure, it could be viable if you have the right risk reward. And let me expose kind of what that means in the simplest terms. And there's a lot of ways to employ this logic over here, but in the simplest of terms, this is an intraday trade. And if I go out and buy this put, which I have done, and say you bought it for like $1.30, all right, keep the math nice and easy over here. So we go out and we buy this for a $1.30 debit, all right? And that equals buying the 136.50 puts. Okay, so buying the 136.50 puts. Now, what would happen if the marketplace rallied $1? Now, buying this put is a bearish position. What happens if the market rallied $1 right here, right now? Well, this put would go from 136.50, be worth roughly what the 135 puts are currently trading for, which is about 80 cents. So if I'm dead wrong, okay, my trade is going to go from $1.30 to, let's call it 80 cents. I'm just rounding it over here. So, all right, all of a sudden this thing is going to be worth 80 cents. What in fact do I lose? So if I'm wrong, okay, and the IWM, and so here's the I, okay, WM, and the IWM rallies $1. If the IWM rallies $1, what do? I lose approximately 50 cents of the premium that I paid out, right? So I go from 136, immediately the option is what? Trading for about 80 cents. Okay, right? The 136 half puts are worth what the 135 and a half are going to be worth. I'm going to lose approximately, again, 50 cents in that transaction. But what if I'm right? What if the IWM, okay, sells off by $1? Well, the 136 is going to be worth exactly what the 137s are worth. How much is that? It's about $1.30 to, just over $2. So the point is, okay, if I'm wrong, I'm losing about 50 cents. If I'm right, I'm going to make about 70 cents. Now, in a perfect world, okay, in a perfect world over here, where the marketplace could go up $1 or down $1 on, again, a 50-50 notion of a trade, does this make this trade viable if we do it, okay, hundreds of occurrences? You can't look at trading as like one or two occurrences. Let's say you did this trade hundreds of times, all right? Do this trade hundreds of times, and you're not just risking $1 to be able to make $1 out here. You're going out, and this translates to, well, if I'm wrong, I'm going to lose 50 cents, and if I'm right, I'm going to make 70 cents. And people ask about stop orders and so forth. I don't even want to go that far today. I just want you guys to look at viable risk-reward setups, and that the trade logic that you employ is far more important than the directional bias that you believe is so important. Again, wherever you turn on, oh, it's about this. Oh, you got to be right, pick a direction. Got to be right, pick a direction. Well, earlier today, I went out and I saw a little rally over here, and I bought some puts. Okay, and sure enough, we came down a little bit. Now, the puts, they've made a little bit of money, lost a little bit of money. Okay, we laughed, we cried, but they're up a negligible amount. But this trade, it's not about the one position. Okay, it's not about me making or losing money on this one individual trade. It's about the right risk reward and doing smart things again and again, and not just on intraday trades. Sure, this is an intraday trade. Okay, I'm out of this thing inside of the next, 20 minutes here, as we have another 30 minutes left in the trading day. I'm going to be out of this thing in the next, 10 to 15, maybe 20 minutes at most. Nevertheless, putting on trades that had viable risk rewards, that if you continue to do, again, when I say smart things, continue to do trades with the right trade logic, you can do some damage in this business in a good way, and start to chip away and ultimately make a little bit of capital, whether it's on an intraday basis. But this exact same logic can be employed on a much longer duration. And that was a trade that I brought up in, of course, Bank of America yesterday. One of the most important things that you can learn in marketplace is that the trade logic, okay, has to be put at the forefront. Trade logic is number one. Number two is always going to be allocation. Number three is your directional bias. Okay, those are three things that we've been hitting on at TheoTrade here consistently and time again. And everything that you do has to fit the proper trade logic. Think about it, because throughout the next couple of weeks, as markets may slow down, some holiday trade over here, but that's neither here nor there. We'll start talking a little bit more about strategy. Okay, so tune in to every one of these videos coming up here in the next few weeks as we start to round out the end of 2016. Thanks everybody for joining us here at TheoTrade. I'm Don Kaufman. Be back in the Theo chat room all throughout the course of this week. Have a great evening. Bye-bye.